Good morning, traders. Welcome to the Flow Show. We write Tuesday, 6th of January. Ryan will be out for the Flow Show today. He's probably going to join us on Face a bit later. He has a few uni visits to make for his son, so he'll be joining us a bit later in the day. Before we start this Flow Show, just a reminder that you can still join us for only $1 a day. You can still sign up for what is to come in our community when we are going to morph from Forex analytics into trading analytics. And we also are running a campaign where you can get 30% discount on all trader funding accounts using the code. What is it again? New Year 2026, I think. Anyway, I've posted the link in the chat box that we are having over our show where people can leave all kinds of comments. So that for the ads, let's straight away move over to what's been happening overnight and this morning. First of all, let's go to Asia, where despite China imposing some controls on exports of dual use items to Japan, which is still a follow-up of what Takaichi has been saying concerning Taiwan, etc. Despite that, we still see record levels being traded in the Japanese equity market. So that's still interesting. Just staying on the equity markets, and then I'll move back over to. We see a general move today again, where U.S. stock markets are not really printing fresh highs, but stuff like the Dax, the FTSE, the Nikkei, also the Asian bourses rising. Does seem like we have a little bit of a rebalancing act going on at the start of the year, where the people are rather jumping on non-US based equities, which is something interesting to keep an eye on for how long this may last. We have seen this already in the past a good few times where people rebalance from one into the other countries. Equity or asset markets. There's a bit of that going on now between US and non-US based equity markets again. So something for those trading equities to keep an eye on for how long this is lasting. So back to our Asian centers in Japan, we had a couple of comments regarding the wages again. The Association of Corporates Executive Yamaguchi was out saying that over 80% of their members, association members, are prepared to raise wages again at the same pace as last year or even more. So that's another positive for potential continued rate hikes by the Bank of Japan. The Keidan Ren Tsutsui, he said that Japan must focus the shift to investment as a path for fully exiting deflation, and that is probably just in a reaction or a affirmation of what Takaichi is planning to do. That is exactly to spur more investment with all the packages that she's putting in place. Sorry, I'm still wrestling with a cold, by the way. So if I'm coughing and sneezing during the meeting, don't hold it against me, please. And as a matter of fact, Takaichi commented also overnight in that she won't dump all wage hikes responsibilities on firms, which is pretty interesting. So that's part of their packages that they're putting in place. They're actually going to help with all of that. Not that they are going to give money to the firms, but avoiding tax hikes, sending a few checks here and there to Japanese people is probably going to help to soften any blow that may still linger due to higher inflation over there. Now, one other thing that I mentioned already, I saw over the weekend that one of the major nuclear plants also is supposedly going to get an accelerated approval to restart as well over there. So they are actively working on everything that should be put in place to make Japan function a little bit better. Um, then we had a comment from the Mitsubishi UFJ CEO saying that he favors the next Bank of Japan rate hike coming in the first half of the year. Now, I think when we look at Japan, he meant probably the first half of their fiscal year, which is starting in April, as we know. Staying then in Asia, and the PBOC came up not long ago, like half an hour ago or so, saying that they will keep the liquidity ample and the monetary policy loose. They will even come up with new packages, probably, of measures in monetary policy, not in a not too far distance. They also said that they want to keep the UN FX rates basically stable, and they will use RRR cuts, interest rates cuts flexibly in 2026. They're remaining vague, but I'm not saying that they are not happy about the yuan strengthening, because a strengthening stable currency is always better for investors, and I think that also reflects partially in the Chinese equity markets doing relatively okay, doing okay actually for the time being. So they want to keep things relatively stable, but are ready to support the economy if needed with more rate cuts and RRR cuts over there. And then we move over to the US. Trump has asked Rubio to oversee the Venezuelan overhaul, and then especially talking about what's happening in energy. So after all, they are very interested in what's happening with the Venezuelan oil and other energy supplies that they can find over there. And he even said that the US government may subsidize US oil companies to rebuild the energy infrastructure in Venezuela. So that's a bit of an add-on, a bit of an interesting one. We know that pumping Venezuelan oil is extremely expensive, but if they are going to subsidize the oil companies, maybe over the course of time, they will get more access or better access to easier access to all that Venezuelan energy that is still in the ground. So that's one that we have to keep an eye on as well. As for the time being, just looking at oil prices, they're trying to creep back up. Um, yeah, subsidizing those things will probably take a fair bit of time. And in Venezuela as well, there were shots and blasts heard in Caracas overnight. The officials said that the security forces were firing warning shots, sorry, at drones flying over the presidential palace area without permission. So not everything is quiet over there, but in general terms of how the situation is over there is a bit of support for the vice president taking over there, at least for the time being. But the US is going to be very actively involved, as Trump already named Rubio to lead that Venezuelan overhaul. Um, Other headlines. Well, I don't think there's been too many other headlines. We had, then coming closer to home, we had a bit of an interesting comment there from ECB's Villeroy this morning. He's saying that he fears the US could increasingly weaponize the US dollar-based global payments and lead some jurisdictions to develop alternative payment systems and fuel um, the diversification out of the dollar by global investors. Now, thinking back to what's happening in those equity markets that I've been talking about just a few minutes ago, one and the other may have to do with each other. So we have to be mindful that it's still possible. And if you see any headlines coming out of the US, that there may be hints at them, as Villeroy calls it, weaponize those payment systems more. It may spur another leg out of the US dollar. So those are things that takes time, but over the course of 2026 may all of a sudden pop up and spur some decent moves in global markets. Then, okay, um, and really for the most present headlines, that is kind of it for today. So we can straight away move over what's been happening on the data front. So yesterday we had this ISM manufacturing in PMIs coming out in the US. Globally speaking, still on the weak side. We had the global index coming down another bit, 47.9, well below the 50 mark now. Prices remaining stable versus the prior one. Employment index ticking up slightly, but still remaining well below the 50 mark as well, and the new orders as well. We know that manufacturing is not the biggest sector, has been documented already enough, but still it helped the dollar to turn around a little bit from stronger levels yesterday when that came out, and we had towards the end of our session and into the US afternoon a bit of an acceleration to the downside on the dollar. This may just have helped this move, which I must say that I've already been saying on the shows yesterday that I was actually a little surprised that the dollar was continued at some stages to be bid in our European morning, but then finally it started to turn around. What's been happening overnight? We had the yen monetary base continuing to tighten or to come down, so that is to tighten really. In a different era, it would have really underpinned a currency. But as we see that it's not on the front of people's mind right now. I think there's a bit of this fight going on between what's going to happen on the wages and that heavy stimulus that Takeichi and our government is putting in place. But it's something that if Japanese data would turn around and we continue to see um, this kind of action, which is also a result, of course, of the Bank of Japan buying less JGBs and trying to get rid of the excesses that they have. So I mean, it's a result of that, but just keep a distant eye on this one because it can, in the end, I would say it can impact the currency after all. And then moving over to what's happened this morning on the PMIs in Europe. First of all, we had the French CPI coming out at a 7-month low. Um, and then jumping a little bit, we also had the German state CPIs all coming in below the prior readings and quite a bit. As James already mentioned, the expectations for the pan-German number coming out later on are already for lower numbers. So they are in line with what the expectations may be, but they are coming off, okay? Even if the ECB is still very much on hold, wanting to see what's happening on the prices in the Eurozone, I think they will need more um, like for instance, weaker data out of the Eurozone in what concerns growth, or perhaps the PMIs to move again. But um, they are those CPI numbers, those inflation numbers moving in the direction of and not hinting, especially not hinting at what the German members of the ECB said, mostly the German members the German members, sorry, saying that the next move may be a hike. Those are not numbers that are telling us that ECB should be hiking next. Also, the PMI numbers, we still see Spain outperforming Europe in a big way. A very healthy services PMI number over there. But the rest of the field is coming down. Italy came down from 55 all the way down to 51.5 on the services, still above 50 though. France just around the 50 line. The German services came in slightly. Those are final numbers, by the way. French and Germans December numbers were final ones. Composite coming down, but the services holding their ground. Okay, and then finally we had the UK PMI data, also a bit lower than the expectations, but holding their ground versus the prior data set that we had. Still, no, I'm not going to say comfortably, but still above that 50 line. And today we really need to talk about the about sterling because it had a very decent move yesterday. So what's further on the docket for today? As I already mentioned, we will have the German CPI. We will have the Mexican consumer confidence for those trading MEX. There's a kind of an interesting range there developing also on the dollar mix, just around below 18. I may have a look at that as well. And what else do we have? Not a lot. Yeah, we have the S&P Global Services PMI, but those will also be final readings, I think. And before the next flow show, we will have Aussie CPI coming out. Australian dollar is one of those who is performing pretty well in today's market, so that may be an interesting one to monitor that inflation, especially knowing that RBA is still on the hawkish side of things, kept rates unchanged. Market is even thinking that they may raise rates twice this year, which I'm still a bit in doubt unless we get like a good economic performance besides the inflation readings over there. But hiking rates is something that central banks in today's environment are not really wouldn't be happy to do unless of course we're seeing like growth numbers etc defying all laws of gravity. And then what else do we have there? We have those construction PMIs, we have employment rate, and then we have Eurozone Italian CPI tomorrow coming out before the next flow show. And that is what are the data concerned. Okay, let's move over to what has been happening yesterday since we left each other. I was talking about that 50-70 zone in the euro. We had a bit of a test there right as the US walked in over face. We had this test there, but then from there on we started to recover. We also recovered above 117 figure 5, which was my first level that I was monitoring. I bought a little bit in this down move yesterday, so let pieces go as I usually do. And now what are we watching here? We are watching this 117 figure 5 as a first bit of support in going into the US session. We see a bit of a setback. I think globally the markets could be going into a bit of a wait and see mode right now for what's coming next. We had this first day back to the office where moves. We had the first reaction to what's happening in Venezuela. We did not really have yet any specific or hard we had comments obviously from a little bit around the globe, but we didn't have any like real hard comments from other parties interested in Venezuela, like China or Russia or Iran, for instance, yet. So maybe the market is going to go in a bit of a wait and see mode now until we see the next headlines or until we need to see next data take the market one way or the other. So intraday, a little bit of a support here at 117 figure 5, but this whole thing is still, as we already mentioned with Ryan yesterday, is still holding us within a range, a positive range, but a range. Okay, we'll have to get through 117.5 today or in the next few days, with a confirmation above those levels here, to move back into the 118 zone. For as long as that doesn't happen, for as long as we see subdued FX options, an FX option picture as we see right now as well. The 1 month trading just above 5% in euro. That's not telling us that we are going to break significant ranges right now, unless we are getting significant headlines, of course. Excuse me just for a minute. I'm taking a sip of coffee. Okay, back with you guys. Now I'm moving over to Brand's favorite. Here we are, Brand. So yesterday we had, and I'm going to move on to the 1 hour because that's been an interesting one. We had a couple of quite interesting developments yesterday. We had this bit out of the blue move higher in the cable at the end of our morning, over well, actually when into the flow show, over the flow show, which also dragged euro sterling lower. There must have been a couple of really decent flows in the sterling. Also, when you look at the FTSE, it may have to do, one may have to do with the other, like buying a few UK assets. Market is like looking besides what's happening on the UK political front right now, which is all but rosy. Is not rosy at all, I should say. But we did see a couple of decent legs of sterling buying yesterday, which took the cable finally into the highs that we saw this morning, but yesterday already it took it through this 138 and a quarter, 135 and a quarter, sorry, in the US time zone, which is going to be our little first support of the day. We're not too far away from it, but I'd keep an eye on that 138 and a quarter, 5 and a quarter, sorry, 135 and a quarter, to see what's happening there over the course of the day. Um, I don't see too much reason for it to go further, but flows are what they are at the start of the year, okay? So if you see further inflows into the FTSE, for instance, we could see further inflows into sterling as well, and do the FX leg of things. This very much looks like a couple of really decent flows that have happened yesterday in sterling sterling in general, but then it was reflected obviously more in the cable, since the rest of the dollar market also turned around into the European afternoon, and then accentuated in the US afternoon. So 138 and a quarter. If we get back below there, watch this 5 and a quarter. What am I doing with 138? Is that something maybe that I'm looking at to finally get up there? 135, the figure is the next one, which is our Friday the 2nd fixing high. So that's another one to keep an eye on if we would get back below this 135 and a quarter. So that's the 135 there. And then obviously if we could get back down, this 134.57 is being a bit of a pivot zone of whatever happens in the sterling after a while, and has been attracting a lot of the moves in the cable. But for the time being, this is looking pretty positive for what's happening in the sterling. So watch out for any further advances. If we would retest the 135 and a quarter and bounce 135.70, and then we're looking at this top end of the closest channel was a bit violated, but the wider one, the parallel one, is still pretty much valid, and that could take us up into the 135.95, 136.10, and look at what's happened over the course of 2025. This 136, 135.95, 136 has been a zone which has been telling us what to do next. So if you would see another push higher up into the 136 area, keep that in mind, because that's where cable may maybe like building a pause, come back down, or make a decision to push through. Okay, that is the sterling side, which as a result, took us quite a bit lower in the euro sterling. We are trading around that 78.6 of the latest move higher, which we saw from August into November in the euro sterling. So this is a daily, okay? So this is not a short-term chart, right? We are at the 78.6, but then look at what's happening below. If we would continue to slide lower, and there I think we're going to have to be very careful if we see that other leg or the last, which could be the last leg lower, from 86 and a quarter all the way back into 2024, down to 86, the figure 85.90, bottom here, around here in the zone, around here in the zone, around here in that zone. If ever we get down to 86, 86 and a quarter, this is going to be the big decision time for euro sterling. Can we get down there? That'll depend if we see another leg of those flows coming in the cable or in sterling as a currency. It'll depend on that, and maybe today will give us a clue whether euro sterling is already stabilizing around the low that we saw back in October, or we can't get there. If we start to bounce from this 86, 50, 55 again, it could be that we are done here, okay? But if we get down below, and there I'm probably going to not be able to wait any longer, but I'm going to try and trade the long side again, because after all, maybe those politics will start to play up again, and or whatever's happening with the public finances in the UK. But if we see that leg down here, I think it's going to be extremely important in the euro sterling. So a couple of currencies who have done relatively well, or pretty well, together with the sterling, is the Aussie. But we tried that 67 and a quarter after again, and that was right during phase, which I really missed yesterday. Right during phase somewhere, we retested very close to 86.60 in the Aussie, and it held again. This is shaping up as being real good support on the Aussie, and we rallied higher. So in the dollar turnaround, Aussie turned around as well. We rallied a bit, and actually over Asian time, we moved over that 67.25 zone, tested close to 67.35, but we're seeing now a round of take profit selling, taking it as back down there, been in line with the rest of the dollars, which are also showing a better performance. Also, as we saw, euro dollar is coming down, cables coming down, etc. Aussie is no exception. That is coming down. Watch what is going on over those CPI numbers, CPI data coming up tomorrow, very early morning or late for um, the US people following us. 66.90 is going to be the first support there, with a little bit more here around 85. Maybe we can hang around in this zone until we get those CPI data, okay? But if we, after those CPI into tomorrow, then depending also on what the rest of the dollars are doing, if we get a hold of this 67 and a quarter, I think the next leg may be somewhere up into the 68 and a quarter. This is kind of how I'm still looking at the Aussie, because Aussie is doing well. It's still holding up well versus the Kiwi around 116, but also if you look at what's happening in the Euro Aussie, for instance, it is still trading very heavy, and as a matter of fact, it is trading around that support line that we have here. It's actually, I think if I would draw it like really to the pip near, we are basically trading on it right now. This is still a sign that Aussie is doing pretty well. If you see those kind of crosses on the Aussie, doing pretty well. So this is also going to be one, I think, which is going to be important over tomorrow's CPI. If we get a confirmation that CPI is sticky in Australia, this may be going for a leg lower, and then in turn support, obviously, the Aussie dollar. Sorry. And Kiwi is also doing better, but while I'm on this page here, quick look at what's happening in Canada. Canada has been a laggard on the recovery of the currencies versus the dollar. It's still trading above 137.3040 the 137 and a quarter here. That's your support zone on the day. 25.40 dollar Canada. Okay, if you see a test over here and we hold again, that is maybe the hold that's going to take us into 130 138.3540 after a retest, I would say, which is still very possible, especially looking at oils. If oils continue to push higher, maybe we are going to get that retest, and then Canada also doing a bit better on the crosses side of things. And I'm not seeing too many comments from any of you, so I'm just going to close with what's happening on the metals. And this is what is happening on the metals. So yesterday, I said that I thought gold, silver needed to would push higher on the Venezuelan thing on the geopolitical risk. They have pushed higher. I'm happy took most of it off actually on this run higher this morning. 44, 44, 44, 44, all fours on gold is a bit of a level here intraday. A bit close for comfort maybe, but it is a bit of a level. So any retracement could drag it back down to the lower part of the 44 zone. But for as long as we have this geopolitical uncertainty again now, and we don't know when the reactions will come, but I trust that they will come from the other interested parties in Venezuela, or more in Colombia, or more about Greenland, etc., etc. We should still see a bit of a support here. I would be surprised if we get back below 43.80 on what is happening right now. But obviously, markets never say never. But again, any retracement, I think we should find bits higher than those lows that we have seen before. Silver as well. It's held really well. Did another push even above 78.75, which I highlighted yesterday. Um, it's coming back down a little bit, just like the rest. Again, I'm just going to repeat that market may be in a bit of a what's next mode right now. So we may see more corrections, people taking a bit of profit who took the move, not willing to chase highs. And it's going to be, I think, pretty similar in most instruments that we are trading now, apart from what we are seeing that move out of or stable US equities and then back into other equities. Maybe that's going to linger on a little bit. But for the rest, we are in most of the instruments, I reckon, in a bit of a wait and see for what's next mode. So we can see some horizontal, which in silver terms obviously means several dollars potentially up and down, back down to 75, maybe 77 is the first level to watch, then maybe 75 and a half or so. But for as long as this zone and this trend line isn't broken, the global picture remains very positive. And with that, ladies and gentlemen, I'm going to thank you for being with me today, and I'll see you in a couple of hours on Face. And have a good day, everybody. Thank you. Bye-bye.